You're welcome to my YouTube channel. So in today's video, we'll be talking about risk management and percentage trading in Forex. So we'll be looking at these key aspects of risk management. We'll be looking at trading psychology, percentage trading, and how to use the position size calculator. So let's talk about trading psychology. The reason traders struggle with psychology is not that they don't have a good strategy, but the major reason is because they don't know the actual amount, the exact amount they're willing to lose on a particular trade before executing the trade. So if the trade starts going against them, they quickly close the trade, and later on the trade goes in their direction, but before then they already out of the trade and they start complaining of psychology. But the major solution to this problem is knowing the exact amount you're willing to risk before executing the trade. So before you take any trade, ask yourself, how much am I willing to risk if this trade goes against me? So with that, your psychology will always be intact. You won't have any issue of psychology even if the trade goes against you. So let's talk about percentage trading. To be consistent in forex trading, you have to treat forex like a job. In any business, you risk and gain by percentage, and that same thing applies in forex trading. In forex, the only way you know if your strategy is profitable is to stick to percentage trading. With that, you can track your performance and your progress over a period of time, and you know if you are actually profitable or not. The major rule of my own risk management, and most traders also stick to this rule of risk management, is to risk 1% of your capital per trade on your personal account and 0.50% on your prop firm account. So if you're risking 1% of your capital per trade, it means you have to lose 100 trades straight to blow your account. Whilst on the prop firm account, because of the rules of the prop firm, like the prop firm I trade fundedness, and the overall drawdown of fundedness is 10%. So when you're risking 0.50 of your capital per trade on a prop firm account, it means you have to lose 20 trades straight to fail your funded challenge or blow your funded account, which is not possible if you know what you're doing in the forex market. So how can we calculate our risk in forex? Is to stick to the position size calculator. So the easiest way to calculate your risk in trading is to use the position size calculator, because it shows you the exact amount you are risking per trade and also gives you the appropriate lot size to use on that particular trade. So I will show you how to use the position size calculator to calculate your risk in Forex. What you do, you just type baby pips calculator on Google. You will get this calculator on Google. So for this example, I will use GBP card for this example. This is a trade we took on Thursday. We are actually on this trade. We're still running in profit. So I will use this trade for this example. So first of all, let's know how before you execute the trade, know the pips. How many pips are you risking for that particular trade? So for this trade, we are risking 40 pips to get 122 pips, and it's actually a 3% RRO trade, a 3% risk to reward ratio trade. It means we are risking 1% of our account to get 3% of our account. So the first thing you first of all feel is the account currency. What account currency are you trading? Is it a USD account, a GBP account, or a CHF account? For this example, and most traders trade the USD account, so we'll be using the USD account for this example. So how much is your account balance? So you feel your account balance. Let's say you're trading a $10,000 account. So same thing applies to any account you're trading. You just fill the account balance here. And the percentage you're risking. Like I told you guys, on your personal account, you risk 1%, and your prop firm account, you risk 0.50%. So on this one, we'll be using the personal account as for this example. So let's say we're risking 1% per this trade. The stop loss pips, we just calculated it, is 40 pips stop loss. So the pair we are trading GBP card. And the current US card ask price, this is the entry price of the trade we're taking. So this is the entry price of this particular trade. So after filling everything, you calculate, you hit the calculate button, and this is what you will get. So this is the result of the calculation we just did. So for this trade, we are risking $100 for this trade, which is 1% of our capital. And the lot size we're going to use for this trade is 0.43 if you're trading a standard account. If you're trading a mini account, this is the lot size you use. If you're trading a micro account, this is the lot size you use. But for this example, we are trading a standard account, so we'll stick to the standard lot. So if we want to execute this trade, this GBP card trade, this is the lot size we're supposed to use on this trade, 0.43. And this is the exact amount we are risking. So if this trade goes against us, we'll lose just $100 for this trade. But if it goes in our direction, like I told you guys, the trade is a 1 to 3 risk to reward ratio trade. So we are risking $100 to get $300 for this trade. So this is all about percentage trading and how to use the position size calculator in Forex. So if you find this video helpful, make sure you like, you share, and you subscribe to our YouTube channel, and also leave a comment below about your thought on this video.